The second thing is that exactly what you just said, Jason, is that people don't even understand chain of custody here, which is that you thought that you owned this Bitcoin. It turns out you actually may not actually own them at all. You thought that you were properly lending them out. You actually don't. There is no enforceable contract, it turns out. And so I think that's going to be an entire set of different legal issues that are now going to come to the surface because people who actually legitimately lent this stuff out, for example, like if you short a stock and you go and borrow stock from any one of us, there are really tight guardrails. If you wanted to go and put a credit derivative swap on against debt, there's a central clearinghouse that makes sure you're not over levered. You have to go and get audited by a bank to even get the kind of account that allows you to put these derivatives on. None of that was possible in crypto. Coin activity as a function of year and value. Nick, can you just put that up just so that we can look at that? The crazy thing about this chart when you look at it is, and it's pretty obvious, is that we are collectively in one way, shape, or form basically trading up ever since 2018, really, with all the stimulus. Because if you look at, the mean price of Bitcoin, about 2018, it was a nothing burger. What we were talking about was, a price that was sort of between a few $1,000s, $2,000, $3,000,
10,000,
and then 3,000. And then all of a sudden, when all of this stimulus money hit the market, look what happened to it. Yep. But I think something unique also happened, which is that people really understood how to run these very complicated off-chain Bitcoin ARBs. And I think we should explain what those are because those are what's behind the Three Arrows Capital. It's behind, I think Sam had this kind of oblique tweet that said, some of these exchanges are actually already insolvent. They're already the walking dead. So the first thing to keep in mind is that, this is a completely unregulated market, right? There are no market makers per se that actually have reporting requirements to any regulatory authority. There aren't any clearing houses. There isn't a way for us to understand systemic risk as it builds in the crypto market. So what happened starting in 2018 and 19 is people realized the following things were true. It's sort of what we talked about last week. You go and do some crazy round. You mark up some phantom equity in a company. That company then issues tokens. You then list the tokens, not on a blockchain per se, obviously, but in a place where trades can happen off chain, right? And there's a bunch of exchanges where these things happen off chain because it's one company, and then they have a bunch of segregated sub-accounts. And what happens is when these things initially get listed, retail goes crazy, the price goes up, folks basically dump on retail. And you spin that loop as fast as you can, and you can extract an enormous amount of money. Along the way, all these things like DeFi all of a sudden popped out of nowhere. And it's like, hey, you can earn 15, 16, 17, 18%, just deposit the Bitcoin. And so folks would deposit Bitcoin. But then what would happen is like the places where those deposits were held would then need to obviously find places to make that 11, 12, or 13%. And so then they would go off chain to some other random person who was offering to pay them even more than that. And they would try to arb the difference. But it all catches up with you because when something like a Terra goes to zero, all the Bitcoin that was used to basically, run that DeFi process around Terra vanishes. And then all of a sudden you, the lender, are like, hey, can I have my Bitcoin back? And the broker's like, well, actually, I don't have it. I lent it to somebody else. Let me ask that someone else. And they're like, I'm sorry, I don't have it, but I have these Terra coins, because I was running some ARB and now it went to zero. And that's essentially what we're seeing right now. So we have two big problems. And then I think we have a third that's kind of funny. The first big problem is like, obviously in the absence of any regulatory oversight, this stuff is going to happen. Systemic risks are going to build up. That's what we're facing right now, is an enormous amount of systemic risk, largely around Bitcoin. A bunch of this money, I think, has been essentially just vaporized. And so all these people that try to find their deposits, especially in custodial accounts in off-chain brokers, may be SOL at some point. And I think that's just going to be a huge shit show if that actually happens.
And to be clear, Chamath, they don't have the keys to their own Bitcoin. They gave money to a custodial account. They then did this lending, went out to get them to 15%. and they don't have any recourse here. They can't get their Bitcoin.
Well, look at this article.
Why
now.
real Bitcoin owners put them in a wallet and own the keys.
Does anybody have recourse to this Three Arrows Capital and all of this other interrelated parties that are now, gone completely bankrupt because of this scam? The answer is absolutely not. So that's the first problem. You have absolutely zero oversight, which means systemic risk has been built up in the system.
I'm no crypto expert, and I've not been an investor in cryptocurrencies. I read the original Bitcoin white paper. Makes sense. Bitcoin itself, to me, makes sense as a potential, initially it was kind of interesting as a potential alternative currency, but the transaction fees were very high. And so it never really seemed to make sense as a replacement for traditional financial networks until those transaction fees dropped below those of the traditional financial networks. And the biggest concern I've always had, which I've mentioned multiple times on the show, is that whenever anyone talks about a quote cryptocurrency, they talk about the price of it in dollars. And if it really is meant to be an alternative to the US dollar, why are you talking about it in the price of US dollars and it's up and it's down relative to dollars? And that implies ultimately that the intention would be to transact back to US dollars, which implies that the intent is not to be a replacement for the US dollar, which was a lot of the early prognostication of Bitcoin. Was it was going to be a replacement for the US dollar. It's going to be an alternative to traditional monetary systems. But ultimately, if you're just measuring this in dollars and it's up and it's down, everyone's freaking out every day about crypto's up, crypto's down, that means it really is more like a security. Except securities definitionally are supposed to have a secured interest in some underlying set of assets. And there's no underlying asset. It's not actually a security because it doesn't provide you a secured interest in anything. So it is effectively a bet on some systems of computers that are meant to facilitate some set of activities that, ultimately people really only seem to value in US dollars. So I don't know. I mean, where does it all go? It seems like I mentioned at our predictions episode last year that all of these smaller things are going to get blown out, these quote unquote cryptocurrencies, even though many of them don't really act like a currency. And, maybe Bitcoin itself persists. And it seems to me like that's always going to have good staying power.
Is a future technology platform here with crypto. But I've been saying this for the last year, that just because there's a future technology platform doesn't tell you what the pricing should be. And the price action got decoupled from the level of progress in the space. You should always be looking at what is the real usage, use cases, customers, revenue, things like that. And people stopped doing that. And I think part of the reason why the narrative was so powerful, if you go back to last year and the chart that Chamath showed about the increase in the price of Bitcoin, which is really the root of everything, right? Because, first Bitcoin appreciates. And then if you think about it, Ethereum's market cap is like a derivative of the Bitcoin market cap. It's been roughly 40%. And then the altcoins sort of get the market cap of the altcoins is sort of derivative off Ethereum's market cap. So the whole thing kind of moved up in sync. And the reason why Bitcoin moved up so much is that as the Fed kept printing more and more money, you had fans of Bitcoin saying, look, the Fed is debasing the US dollar. We're going to need an alternative currency. That was a powerful narrative that the Fed seemed to be vindicating. And there was a positive feedback loop, which is the more the Fed debased the currency, the more that the price of Bitcoin went up. Now, the reason the price went up was not because they were debasing the currency. It was because they were creating so much liquidity that it created a liquidity effect that then drove up the price. Yeah, you saw an increase in speculative investments across the board, including but not limited to crypto. So again, when the Fed prints too much money, it creates asset bubbles. But there's a powerful reinforcement because as the Fed was printing, Bitcoin and supporters of Bitcoin had a really great explanation for why Bitcoin was going up, which is they're destroying the US dollar. We're going to need an alternative soon. Now, I think in the very, very long term, could Bitcoin be a non-fiat currency? Yes. I actually think the technology works. You could create a new kind of currency that's backed by math and by cryptography as opposed to fiat government. But that could take a really long time. That could be decades in the future. But what happened is the market started thinking, well, that's going to happen soon. And that's where it just got ahead of itself. That was the tulip part of it.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.